it's kind of this contradiction, right? The headline is like really positive, raising that guidance, raising that outlook. The demand is clearly there. The stock falls. And so like it seems like the expectations were high. People are already looking much further ahead in terms of that demand picture. What was your read on it?
Sure. So that's a very good point. So basically, I would say don't forget that to start with, ASML is already up nearly 40% year to date, and semi-equipment segment has been one of the strongest, I would say, sub-segment in tech year to date in this year. So therefore, I would call the set of results reported by ASML today as solid. They raised full year guidance by 4%. The Q1 gross margin was way above consensus expectation because of strong mix. At the same time, they confirmed that they are increasing their capacity to about at least 80 EUV tools from at least 60 EUV tools year on year in 2027. So right. I would say the set of results has been very strong. But at the same time, as the most, let's say, successful or high-profile tech company in Europe, ASML's always well-earned, and ASML expectation has always been elevated. So I would call today's share price movement as just lack of revision on the back of this solid set of results instead of anything which is worrying.
Tammy, can we just linger for a moment on what you just said? 80 EUV machines. To a lot of people, they'll say, hold on, I don't understand that. This is the world's most important maker of machines in the chip manufacturing process, and they're guiding that they'll make 80 of them. Of course, the context is they're $400 million a piece. Just explain why that number's significant.
Sure, of course. So those tools, you are correct, are sold for 230 million each. So those are probably one of the most expensive set of tools in the market or in the world. And I would say that it's important because we are moving from 60 in this year, and we were at about 40 a few years ago. So therefore, from 40 to 80, they're already doubling that capacity they can serve the market, which is showing that AI demand and memory demand has been super solid over the next, let's say, 6 months or 2 years. And going forward is likely to support the further expansion of AI market or memory market. So therefore, as a result, I would say that 80 number, it doesn't look like a big number, but don't forget those tools are 230 million each, and we were at 40 2 years ago.
Are they in any way supply constrained here, Tammy? I mean, some on the street had hoped to see the number 90 thrown around. Is there a limitation factor to them? Could they be making more?
So in our view, we don't think that ASML will be a bottleneck. You are right that 90 was mentioned previously as the potential capacity number. But ASML has been super careful in terms of building capacity as per customer demand, because you don't want to end up in a situation that you build 90 tools or whatever the number is, but there is no demand for that. So therefore, as a result, I would say that 80 number is a result of ASML's discussion with customers. And that 80 number, for the time being, is a reflection of ASML's agreement with customer how to serve the end market demand. Yeah. And I don't think it's a limitation. In theory, in my view, ASML can actually do more if the customer need more. And what ASML has been needing is just to hire more people, expand with their supply chain. So I don't think ASML will be the bottleneck.
Let's talk about the demand constraints or fulfillment, because it feels as though it's insatiable in terms of need for chips and therefore needs for equipment, but they had exposure to China. How has that continued to unfold?
So from a China perspective, China used to be 40% of their business 2 years ago. And now with the non-China business being growing strongly, China is about sub 20% of the total business. And China has been stable, I would say. China was slightly better than they previously expected. And China will be stable in this year. But in this quarter, the full year raise was purely because of non-China business was stronger than expected. So going forward, I would say ASML will be continued to be driven by this non-China business, AI investment, memory shortage to further continue as the case for next few years. And China, I do have the view that China will be flattish, and China is working on their localization, of course. So the demand for China is not likely to fall off the cliff. So therefore, as a result, in conclusion, over the next few years, ASML will be driven by both factors, which non-China business will likely to be the key driver.
talking about 230 million for EUV. I mean, if you think about TwinScan EXE, some of the people I talk to, you go sub 2 nanometer, they can get 350 million for that. We'll get back to it at another date. There's a big project. It's called Terafab. It's basically on paper, but it says that in the future there'll be 1 terawatt of compute capacity put through fabs operated by Tesla, SpaceX, and xAI. That would, on paper, make them one of the biggest buyers of ASML's equipment. Have you and the team modeled for that being real? Or for you, is it still an idea?
I mean, we would love to. And you're absolutely right. So ASML do have a version of machine which costs 350 million, which is called High-NA. That's probably will be seen when Terafab is ready to take equipment. So for the time being, we haven't put Terafab in our numbers. But as per our understanding, the intention is real. And there has been discussion already within the supply chain about Terafab. But for the time being, it won't be something happening in the significant way from a number perspective over the next 2 years. So therefore, we haven't reflected that. But I do hope that we can put that in numbers in 2 years' time.